Asia-Pacific markets are mostly higher this morning as investors watch for market reaction to the latest minutes from the U.S. Federal Reserve. Central bank officials recognize that a more restrictive stance in policy could be suitable if inflation doesn't ease, even if it slows the economy. Fed officials also said a hike of 50 or 75 basis points would be likely at the July meeting. The Nikkei is up 1.5% and the Shanghai Composite is up 0.18%. Meanwhile, oil prices extended declines for a third session on Thursday, with the WTI slipping under $100 a barrel as fears of a potential global recession spur concerns about oil demand. For more on this now, let's go to David Madden, who is a market analyst at Equiti Capital in London. Welcome, David. Many thanks for being with us today. So stocks are reacting pretty well for now. I mean, was this all priced in already, or do you think the markets are fearing that they are actually looking at a potential 75 basis points increase this month?
I think to a certain extent, this was already priced in. 3 weeks ago, the Federal Reserve hiked interest rates by 75 basis points. Economists were largely forecasting a hike of 50 basis points, but there was a fair bit of chatter in the markets that a 75 basis points hike could be delivered. That same update said that a large hike again is in the pipeline for July. So people were already kind of half thinking about a 75 basis points hike being on the cards for this month's meeting. Last night, as you mentioned in your intro, the Fed minutes showed that the Fed might need to adopt a more restrictive policy should inflation continue to be persistently high. But they also said that many of the policymakers concurred that inflationary signs are cooling. So it could be a kind of the very kind of crack in the inflation problem could be beginning to show, and this could be the Fed's way of on one hand signaling to the markets, if inflation remains high, we're going to act tough. As we did in June. But at the same time, if they're talking about how they're seeing early stages of inflationary pressures coming down, that could be the kind of wiggle room that they require for this month's meeting to only hike by 50 basis points. And obviously, a cost of borrowing would add to the overall problems of the higher cost of living in the United States. But ultimately, I think the reason why stock markets are rallying today was because not only would the Fed not extra hawkish compared to, say, the update we had 3 weeks ago, they're also beginning ever so slightly beginning to say, oh, well, things might be improving ever so slightly on the inflation front. And should that be the case, we need to actually we don't need to be as aggressive as previously factored in.
Right, interesting. So not extra hawkish, actually. That's the perception. Right, and David, as central banks around the world are actually raising interest rates, because it's not only been the Federal Reserve, we've seen it. Commodities, meanwhile, are falling, and not just oil. We've seen metals, we've seen palm oil. Can you explain to us why? Where's the link?
Well, essentially, the industrial metals market is quite a good gauge of how traders feel about the health of the global economy and where they feel the global economy will be 3 months, 6 months down the line. This week, we've seen silver fall to its lowest level in over 2 years. We've seen high-grade copper fall to a 17-month low. This is really kind of flash warning signs to say the commodity traders are pricing in slower growth, possibly even a recession in some major economies, and therefore demand's going to take off. You've also seen a pullback in the price of oil. Oil recently fell to a kind of a 6-7 week low not too long ago. The shoe is starting to drop as well for oil, because oil is high at the moment, relatively high at the moment, because of squeezed supply rather than perception about demand. But we're slowly starting to see those demand fears trickle through to oil. In relation to why is this all happening, the post-pandemic boom is over. Inflation's high, which is eating away into people's savings and disposable incomes. And to compound the issue of higher cost of living, central banks around the world are hiking rates to tackle inflation. But by tackling inflation, they're essentially adding to the inflation problem because the cost of borrowing is going up. So I think, long story short, things are going to get worse before they get better.
Interesting. David Madden, thanks for being with us this morning.
Thank you.